Joining us now is Seema Shah, the VP of Insights at Sensor Tower, for more on all of your thoughts, of course, on all things Netflix as well as some of the competition. So thank you so much for being with us today. I mean, let's just start broadly here. What have you been really watching as far as recent trends we're seeing emerge this quarter in the streaming space?
I think one of the most important things to note about the streaming space, and particularly for Netflix, is the strength of their retention. I know there's a lot of talk about general competition for time share of viewers' interests, right? So you have social, you have streaming, there's a lot going on. But one thing that Netflix has done really well, especially compared to their streaming peers, is their retention levels, right? 75% of their users come back quarter after quarter, compared to between 50 and 60% for the larger peers. 22% of their users open the app daily in Q2 versus, I would say, maybe 10% for their peers. So they have a very strong retention. And so that is really good for them, because what we've seen in a lot of other of the streaming apps is churn, right? Where people turn on and off depending on if there's a hit show. So one thing I think that's really in Netflix's favor is its retention rate. And I think connected to that is probably the improvement and the strength we're seeing in their ad business, because it's a great platform for advertisers to be on.
Okay, and speaking of advertisers, you mentioned YouTube in your notes, and I do think the relationship there is fascinating, because I've recently now been very involved in YouTube TV. It's life-changing, frankly, especially for watching sports, but how do ad dollars compete on like a YouTube versus Netflix? Because I know they're not really comparable, but their business models are becoming more and more aligned, actually.
Yeah, so we look at them in two separate buckets, right? We would put YouTube against Instagram and Facebook and the other socials. So when you think about YouTube, I think what the standout about YouTube, it is the largest social network with about 2 billion hours spent per day on the platform globally. And it continues to see hours engaged, that metric I just mentioned, increase year over year and quarter over quarter. The other place we're seeing that strength is in Meta's platforms, in Instagram and in Facebook. So they are comparable in the sense that they are both entertainment for users, but their platforms and the way that their engagement is with users is different, right? YouTube is user-generated content. Netflix is more of content, specific content created for the platform. And while there could be some overlap with the content, it's really very different audiences, right? And the way that people use the apps are different. I think YouTube, like other socials, is something that is sort of opened habitually every day. People check it on a regular basis just to see what's happening and to watch shorts and other, short form video like that. Whereas Netflix and other streamers, it's really content focused, and why they see the biggest bump when there's a release in tentpole content or live sports. So for example, when Squid Games 3 released, what we saw in that period versus 30 days prior was a 20 times growth in downloads from the 30 prior days. So their focus is on that, strong tentpole content or live sports. It's really what drives their growth, and the attractiveness is their platform versus user-generated content, which, is more frequent and new, but less lengthy and, maybe less polished, I would say.
Okay, and I'm so glad you mentioned Squid Game 3, because I did watch it, and I'm an avid fan of the show, but are we seeing some of these shows, because they really need like a blockbuster hit, it feels like, every other season to continue to generate the buzz. And so did this generate the same buzz as prior Squid Game? Because that was really like a phenomenon across like the entire world when it first came out, that seemingly doesn't feel like Netflix still has the same really catalog of titles, really.
Yeah, I would say that when Squid Games first came out in November, I guess it was 2019, that was right before COVID, where there was a huge boom in streaming across the board, right? So yes, that was a huge hit, and it was the first foreign language hit that became so popular in the US. But I think that the download growth we saw when Squid Games 3 came out is very indicative of the strength of that franchise, and how having tentpole serialized content still continues to be huge drivers of user growth and engagement, right? So what they have coming up with Wednesday and Stranger Things will all continue to drive that. And they have a very wide catalog of, original content where they're not syndicating from other places, which is why they're able to be so successful, and why I think their ad platform is so attractive. But yes, I don't know that you would see the same rate of growth as you saw for Squid Games 3, because that was new. And then we had this sort of exogenous factor of COVID, where everybody suddenly was at home and paying for streaming. But I think in this current environment, that was a pretty strong reaction and a positive for that piece of content.
I mean, right, it was like something would come out, like any type of show, like The Last Dance, and it was like all you had to look forward to at the time. So that did bring me back to, unfortunately, lockdown. But regarding, I know you said you put them in obviously in different buckets. You have YouTube more in that social media world. Yes. Netflix is a streamer, but saturation is somewhat of that sort of midterm horizon concern for them both, maybe even more near term for YouTube. So walk me through how you navigate that really when it comes to also ad dollars when so many companies are competing for minimal dollars really at the end of the day.
Right. So once you get to a certain point in saturation, let's say in download growth, right, in the US, they're both very saturated. So what we then look at is how their monthly active users are growing and their retention rate. And then I just mentioned that Netflix has the highest retention rate of the streamers. YouTube has one of the strongest engagement and retention rates of the socials. And I think that's what you focus on, because if you're an advertiser looking for the most attractive platform, you need to go where users are engaged, right? That's why Instagram is also so successful, because it launched Reels, and 45% of user time is spent on Reels, and that's where a lot of the ad volume is also being shown now, right? So once you get past the saturation, then it always becomes about retention and engagement, and that's where this content comes in, live sports, different features and functionality like shorts and Reels. That's what drives that retention and keeps the platform fresh for users, right? And so that's where I think is a differentiator. We can't deny that these apps are saturated from a download perspective, but they can still continue to grow. And then something Netflix noted in their earnings conference call is that between them and YouTube, 80% of TV viewership is still unaccounted for. So, with that in mind, that leaves a lot of white space for both of them to continue to grow despite how large they already are.
Okay, that is such a good point, because it does feel like in your bubble, everyone has, the same platforms that you operate on, but 80% would tell you there's still huge market share to be had. So that's a great point. I think probably why Netflix continues to, just really enthuse investors. And from a stock standpoint, it's been really fun to watch this year, especially in the last couple of months. But we are out of time. We so appreciate it for your time today. Seema Shah, the VP of Insights for Sensor Tower.